Hello and welcome to Performance Gurus channel. We are here today with Professor R. Vaidyanathan. Professor Vaidyanathan, thanks for taking your time out to join with us and talk about a few topics that we are going to discuss shortly. Why don't we jump straight ahead and talk about the Chinese stock market. Now, we've been observing that China had a huge run-up from the beginning of 2014 up until end of May. They had a rise of about 150%, and then after that there's been a correction about 30 to 35% depending on what you look at, and then the government has actively interfered to try and shore up the currency and the market, and they've put some limits curves and so on and so forth. And then yesterday we read that they are devaluing the yuan by about 2%. Also, in our previous conversation 3 months ago, we talked about the possibility that China might actually fully float their currency. And my questions to you are: do you see that still happening? How do you see the Chinese economy progressing? Maybe the next 18 months time frame.
It's always a great pleasure to talk to performance gurus, for the simple reason they are one of the few in the front line in terms of dealing with issues which are contemporary as well as which are of serious implications for the Indian economy. This is unfortunately not done by many of the mainline channels in India. So from that point of view, I would thank performance gurus for undertaking this serious task. About the Chinese thing, their stock market is a lot of similarities with ours.
Mm-hmm.
The stock market do not fully represent their economy.
Mm.
The percentage of the companies listed,
Mm-hmm.
say their GDP may be less than easily 20% only.
Mm.
So there is a very important thing. You see, unlike US,
Mm-hmm.
where the stock market significantly represent the economy
Correct.
in terms of the performance of the economy,
Mm-hmm.
here the real economy and the financial markets are not having so much amount of direct relationship.
Mm.
So to that extent, even in India, for instance, market could come down significantly.
Mm-hmm.
At the same time, the economy may be growing at 8.5-9%.
So they're disconnected.
Yes,
I see.
they are not. They are disconnected.
Mm.
The impact on the stock market is also more due to global events.
Mm.
Like, for instance, Japan is hiking up their rate.
Right.
Then immediately many of the institutional investors in India as well as China
Mm-hmm.
will shift to Japan
Mm.
for a very short period actually.
Mm.
So this global institution play a very important role.
Mm-hmm.
In our context, it is as high as now maybe 20-25% actually.
Mm. Mm.
Same way in China.
Mm.
That is the first point I would like to mention. Second is, as far as their currency, I think they are very determined to enter into the IMF basket,
Mm.
as well as I think float their own thing.
Mm.
Actually, their devaluation, I think, strategically is done with that in mind,
I see.
because they would like to represent their yuan in the global situation,
Mm-hmm.
instead of being a repressed or artificially highly valued type of a
Mm.
instrument.
Mm. Mm.
And I think they are entering into the global arena on a full scale,
Mm.
whether one likes it or not.
Mm.
They would like to assert themselves. They would like to show that they are the ones who are in the picture.
Mm.
As far as their overall strategy is concerned,
Mm.
I think their strategy will be to get into the IMF basket
Mm.
and float their own instrument
I
as
see.
a global currency. I think we did mention about it last time.
Mm.
On purchasing power parity basis, they are today number 1,
I see.
and US is number 2, and India is number 3.
Okay.
Japan is number 4 only actually,
Mm.
in terms of the GDP sizes.
Mm.
So they would like to maintain,
Mm.
and at the same time they would like to play a very, very significant role.
Mm.
That is the reason why you would recall they have floated this World Bank equivalent institution.
Oh, I see. Right. Right.
There are 56 members in that.
Mm,
Actually, including India.
Right.
They don't take BRIC anymore seriously or anything.
I see.
They would like to play a very dominant role.
Mm.
And one thing about China is any institution, any committee, anywhere, they would like to be the dominant player. They would not like to play second or third fiddle or something. So I think they are very clear about it. But their current issue is the crisis in Europe and US to some extent have significantly affected them. Because in some sectors in China, up to 40% is for the external world. India doesn't face that problem. Most of the sectors, India domestic market is so large, we are only depending on the domestic market. At the margin, we get affected. For instance, if rupee get significantly depreciated, IT companies will shout. Because they are the ones who are getting affected. But otherwise, on an overall perspective, if you see, most of the industries in India are not so much coupled with the global scenario. If the rupee get, of course, appreciated, some of the IT companies will be happy, but some of the importing companies will be very unhappy. Our major import even today is mainly the oil, oil-related industry, and of course edible oil also. So this is the type of a situation. So I think China, in a closed system, they actually are not as savvy in dealing with the stock market crisis as India would have been.
I see.
For instance, they say that short sellings were completely banned. Selling, you can't ban selling. In the sense, somebody has to buy, somebody has to sell. The market will move on. There are also some reports which suggest the market could have been manipulated, like our Arshad Mehta. And of course, with all the enthusiasm, we can say that we had a Sucheta Dalal at the time of Arshad Mehta, and maybe China doesn't have any Sucheta Dalal. That could be an issue.
In fact, to follow up on your observation, China banned a company that is part of the Citadel Group.
Alibaba.
No. Citadel Group is the world's largest high-frequency
trading
in US.
Correct.
Now, they said that Citadel was, or one of the subsidiaries was manipulating the shares in China, and they've actually banned trading on that.
Correct.
And the interesting part is that there has not been a lot of noise from the US side, where usually they'll have these protestations of innocence and how come this is happening and all that. So it's been kind of very muted. So do you have any insight into that?
No, I don't directly, but one thing is sure, this high frequency trading has been significantly criticized. I think you are very much aware of it.
Yes.
And it is also distorting many of the markets because it is giving advantage to certain
select few
compared to the others. And high frequency combined with algo can create more interesting possibilities and complications. I think one of the muted reaction of US might be that there may be some substance in what China has done. And to that extent, US may not want to escalate it further and make it into a major issue, because so many other things may come out. So that could be one possibility.
And for the record, the Commodities Futures Trading Commission in Washington DC, as well as the US Attorney of New York, are both investigating into high frequency trading.
Correct.
The investigation started about a year ago, around April 2014, a few days before the book by Michael Lewis, Flash Boys, came out. And in fact, Michael Lewis flat out says that the US market is rigged, and by extension, any market that is allowing high frequency trading, you could apply the same rules. I'm not saying it is happening, but it's possible to apply that. So now, how long do you think the Chinese government is going to keep propping up the stock market? At some point, they'll have to take a call.
Yes, I don't think they would go beyond a point. One thing is, there is a good amount of educated Chinese who are educated in best business schools in the world, who have come back or who are helping the Chinese thing. So I think they would also play a very important role. This is my view. And so they are not going to run. You can't run a closed shop or a trade union type of thing in the stock market. I think they would attempt it for some more time and then leave it at that. Once they are very confident their yuan has reached the equilibrium stage, where it will be recognized as part of the SDR for IMF purposes, and they will wait for some time in their economy. Maybe in a year or so they will come out with their own currency.
So by an extension of that thought, maybe I'm putting words in your mouth. Do you think then that the fully convertible currency option of Chinese yuan is still some ways away? May not happen.
Not immediately,
Okay.
but definitely it will be within a year or two.
Year or two.
Yeah.
Okay. So it's not like a 3-month thing. I mean, last
No.
time we thought it was
Yeah.
imminent that it's going
Yes,
to happen.
yes,
So it's not
yes.
really going to happen in the near future. Yeah. So thank you very much, Professor. Thanks for taking the time to share with us your thoughts on China.